The South African Reserve Bank kept the repo rate unchanged at 8.25% on Thursday after increasing about 10 times since November 2021. The bank cited the improved economic conditions as the reason for not increasing the rates this time around. To discuss this further, we're joined by economist Professor Bonke Dumisa. Thank you very much for your time this afternoon, Prof. And you had put your head on a chopping block around the decision that the Reserve Bank would make on Thursday. You were saved indeed. But give us a sense of the sentiment that came out of the governor indicating that we haven't reached the inflation peak as yet and that further hikes have not been ruled out. Your thoughts on the tone that came out of that announcement on Thursday?
I think the Reserve Governor, Re Lisija was quite clear that yes, we have not yet reached the level where we would want to be in as far as the inflation is concerned. And because of that, whilst they agreed to keep the repo rate unchanged at 8.25%, you must note that the split was too close to call. It was 3 for the repo rate to be kept unchanged and 2 wanted the repo rate to be increased. And what he was saying was he was not really trying to scare people. The reality is, yes, we're happy the June 2023 inflation rate was at 5.4% from 6.3% in May. However, as I keep on repeating, the South African Reserve Bank always prefer to have the repo rate, the inflation rate, close to the midpoint of their target inflation rate range of 3 to 6%. And at 5.4%, it is still far from the midpoint. However, he did get the message from different quarters, including with your interview, with your interviews. When I say your interviews, I mean eNCA and all the news media were saying that the repo rates are destroying the economy and are affecting many households. So at least they do listen. And his message then that they've not yet, so they've just pressed a pause button. They've not really reached the peak where they say we'll start cutting down the repo rates. What may be some of the things which may trigger another rise in inflation back to above 6% that we may think of? Many municipalities have just raised their administered prices. Rates have gone up by more than 10% in most of them. And electricity tariffs have risen by more than 15%, and in some cities by as much as 18.65%. Those are the things which are now going to trigger another round of inflation rate hikes. And let us hope they're not going to be as damaging, because South Africans are really tired of this. Many people have lost their houses and many people have lost their cars. And this has got a negative multiplier effect on many other areas of the economy. So let us just pray that whatever the inflation rate will go up to for the month of July, it's not going to be so much that the Reserve Bank may be forced to raise their repo rate immediately at their September 21 MPC meeting. But at least we're happy they do listen.
Yeah, It seems that they did listen this time around, Prof. But another multiplier effect that we've seen here is that it's not just the consumer or households that are suffering. You've got big industry like mining companies who are debt intensive or rely heavily on facilities to conduct their business. They have indicated that they're also coming under immense pressure because of the repayments that they're making that have increased over 10 consecutive interest rate hikes. The impact on major industries like agri, like mining, of these interest rate hikes that we perhaps would have not thought of as we think about households and consumers specifically, the industries that are also suffering from this?
We always think about them. The reason why I hardly talk about them, it is because I do not want to be too forward. Many times when I talk about the cost of living, that is going side by side with the cost of doing business. You and I have spoken about the cost of load shedding on the South African economy. So we just take it for granted then that when we're talking about the rising cost of living for consumers, people will also read in, because the reason why we don't normally talk about that thing is because we don't normally talk about the producer price index, the PPI, which in most instances becomes a predecessor or a precursor to what we may expect from the inflation rate, the consumer price index. So businesses are equally suffering, but as the governor of the Reserve Bank was saying, things are becoming better. The muted load shedding, I don't know whether muted is the right word, but lower load shedding in the past few weeks or even past 2 months has actually helped many businesses to say, well, we will not be forced to rush into spending even more on dealing with load shedding. I mean, we've had a situation where Eskom itself has said that consumers must not rush to buying inverters. So which means they're saying maybe things are going to get better. And when you listen to Dr. José Ramahowa, you hear his tone saying, at least by December, load shedding is going to be a thing of the past. I don't think it will be the case, but at least over the past few months or weeks, we've seen that the intensity of load shedding has not been as worse as when other people started saying we may see stage 16 load shedding because of winter. We are at the peak of winter, but the intensity of load shedding is not as worse as we saw some months back.
Prof, what about the other upside risks? I mean, the governor spoke about the current account deficit, the lower cost of exporting and the risk that that may pose, El Nino having an impact or risking the agricultural sector. He spoke of a couple of upside risks, and I wonder if you want to weigh in on a couple of those and what those could do to the medium-term outlook for the inflation trajectory.
It's very easy to deal with the natural causes because they are not within your control. So what you cannot sort out, you cannot sort out. I mean, the weather patterns and their effect on the agricultural sector are outside our control. So we cannot really bother. Not that we cannot bother so much, but we cannot plan so much for them. But things like load shedding and the increasing repo rate when before it was a question of the imported inflation, those who could get under control. And they've started with the right move now that at least after more than 20 years of continuous repo rate hikes, which were pushing up the inflation as well, that at least we can say we can reorganize now and see how we can deal with those things which are outside our control. But as I keep on saying, for the government to make sure then that we can get our economic growth back to where we want it to be, government must deal straight and in a very calculated manner with lawlessness in the country, which has been part of the things which have worsened our situation.
Thank you very much, Professor Bonke Dumisa, joining us this afternoon to unpack that interest rate decision that was made by the SARB and what we are likely to see.